So for the year-end rally, right, that I've been talking about earlier. So we look at historical, right? So this is not just a feeling, we think like festive period that therefore there's a rally, but over the later I'll show you the charts, right, where you can see historically year-end there will be some kind of rally. And besides just seasonal, the year-end there's rally, right? Look at fundamentals also. So like, is there is the fundamentals supporting it, right? Because if right now the fundamentals are too high, right, overvalued, then the probability of the year-end rally might be lesser. But right now, if you look at it, right, so this is maybe a few days ago, I was doing the slides, right, and I took a screenshot of the general market, right, not individual, but like general, and let's just use PE ratio because everyone understand it, right? So you can see the general market, the fundamentals aren't, right now we are like slightly below 20, P ratio, right, slightly below 20. And the last time we had it was, maybe in 2020, so over here, 2020 during the March crash, right? And then of course the 2008 over here, and then a few more, right? But you don't see it much often. So if we look at this generalized, generalized, a bit simplified valuation for the S&P 500, you will realize that markets are actually a bit on the undervalued side, right? Maybe slightly undervalued. Can it be more undervalued? Sure, you can drop even more, right? But the general idea is right now, valuation isn't that high. All right, so valuation, there's still room for the market to go up, especially if Q3, right now, Q3 is just finishing, and if some of the, top companies like Apple, Microsoft, Google, Amazon, right, if they report good earnings, right, if their earnings is better than expected, that could be a good catalyst for the market to move up. Right, so fundamentals, that potentially could be a setup for the market to move up over the next few months. And in terms of sentiment, right, so I was sharing earlier, generally the market will go up in the green line, right? All right, but for midterm years, right, so this year is a midterm election in the US, right? And if you realize for midterm years, right, the market, for most of it, right, the second quarter, third quarter, from like March, April, all the way to September is kind of sideways or a bit flat, or actually it does decline a bit, right? From here to, it does drop. But from October 1st onwards, right, you see this like very bullish trend out, right? Why so? It's just why like midterm election is like that. So I don't go too much into politics of it, but somehow just before election in November, mid-November, right, your voters need to feel good about the country and the people you are electing. So somehow, there will be some kind of I won't say arrangement, but like, things just happen, for the market, Federal Reserve, the Fed, all right, they might, do what is needed, all right, to get the votes, right? So somehow, right, they will make it happen that potentially the market might go up. So I don't want to go into the, like politics and all that, but I look at data, right? So the data has shown that, midterm elections, this is what happened, right? So there might be a sizable year-end rally. So right now we are, I would say, mid of September, somewhere around here, and the chart do exactly look like that. March or April to September, it was kind of like trending down, not exactly, it's kind of sideways or dropping down a bit, right? Trending down a bit. So should we see a reversal potentially? All right. So historically, also besides just the midterm election, September, right, is usually a trend down month. September somehow is always trending down. But after this trend down, right, October we'll start to see a reversal, right? That means like September, the stock market trend down, but October will start to reverse and trend up, right? So is this for sure? Like, does it play 100%? Of course not, right? Will it play out this year? Maybe not, right? But this is just something that I'm looking at, right? And how to capitalize on this, right? So, okay, so we have this potential setup based on historical data. How can we capitalize on this, right? So that is the golden question now, right? So there's a few different ways you can do it. One will be you can obviously just buy the index, the S&P index. You can just buy outright. You can buy some options call on it, right? Or you can find a company that's in S&P or that you are personally invested in, that you have high conviction in. So for example, for me, it might be Tesla, because I understand the company well, I have high confidence in it. And even if I buy the shares and over the next 3 months it doesn't go up, then it's fine. I just hold it for the longer term, right? So that is one way also. And why Tesla? Because like for me, I feel like Tesla potentially has room to outperform the market. So if you look at this chart, right, like over the next 3 months, if the market goes up, that's great, man. But if Tesla goes up even more, that means outperform the market over the next 3 to 6 months, like you go up, the slope will be a bit more sharper, right? Isn't it better for me? Right. So this is what I think might potentially happen now.